Hi children, good morning. Today we'll do the revision of adjustment entries, opening entries, discount and bad debt. Okay, now let's see the question of adjustment entries here. Our first question is interest due but not received, rupees 10,000. Interest due but not received. Interest not received means income not received. Income not received means it is an accrued income. So the two account affected here will be, one will be interest account and another will be accrued interest. Interest is an income, so it will be credited. Accrued income is an asset. Okay, so it will be debited. Okay, so what will be our journal entry? Accrued interest account debit to interest account. Okay, so an amount will be 10,000. Adjustment entry of accrued income is accrued income account debit to income. So here accrued interest account debit to interest account. Next question is our salary due to staff rupees 50,000. That means salary is outstanding. Expenses outstanding. What is the adjustment entry of expenses outstanding? Expenses account debit to outstanding expenses. That means salary account debit to outstanding salary account. Our entry will be salary account debit to outstanding salary account 50,000. Okay. Next is out of the rent paid this year, 5,000 is for next year. That means here expenses we are making the payment in advance. That is also known as prepaid expenses. Adjustment entry of prepaid expenses is prepaid expenses account debit to expenses account. That means prepaid rent account debit to rent account. An entry will be prepaid rent account debit to rent account and amount is 5,000 being rent paid in advance. Now let's see the next question here. Provide 10% depreciation on furniture costing rupees 1 lakh. Okay, we have to charge depreciation. What is our entry for depreciation? Depreciation account debit to asset account. Depreciation is considered as expenses and asset values reducing, so it will be credited. Okay, and amount how we will calculate 10% of the cost. What is the cost here? 1 lakh. 1 lakh's 10% is 10,000. So our entry will be depreciation account debit to furniture account and amount will be 10,000. 10,000. We calculated here 1 lakh into 10 upon 100 being 10% depreciation charge on furniture. Okay. Now let's see the next here. What is given? Goods used in making furniture, sales price 5,000, cost rupees 4,000. Okay, here goods used in making furniture, that means goods is going out and furniture it is an asset. Goods is used for making asset, so asset will be debited and purchases will be credited here, and here we will include the cost. Sale value will be only taken at the time of sales. Rest are all whenever the goods is going out of the business other than sales, it will be considered in cost price. Okay, so what will be our journal entry? Furniture account debit to purchases account and amount will be here 4,000. Okay, furniture account debit to purchases account and amount will be 4,000. Now let's see the next question here. It is given received commission rupees 20,000 by check, half of which is received in advance. Here two transactions are there. Received commission rupees 20,000 by check. Here we are receiving the commission, so our entry for this transaction will be bank account debit to commission account. Okay, here next is that half of which is in advance. We have to do the journal entry for advance commission, that means unearned commission. Okay, so what will be our entry here? Commission account debit to unearned commission. How much amount we will transfer? 10,000 we will transfer. Okay, 20,000's half is 10,000. So our entry here is bank account debit to commission received 20,000 and then commission received account debit to unearned commission account 10,000. Okay, being commission received in advance adjusted. Okay, first is we are received, second we have to do the adjustment of advance received. Okay, now let's see the next question here. Allow interest on capital 8,000. Okay, what is the journal entry for interest on capital? Here interest on capital is expenses and our capital is increasing. So interest on capital will be debited and capital will be credited. Okay, what will be our entry? Interest on capital account debit to capital account. Interest on capital account. Okay, and amount 8,000, we had written 8,000 both in the capital as well as on interest. Okay, now next entry is our drawings. Okay, charge interest on drawings rupees 1,500. Here we can do two types of entry. One, because interest on drawings affect capital, capital is reduced and interest on drawings is an income to the business. So capital will be debited or interest on drawings will be credited. So one entry can be capital account debit to interest on drawings account. Okay, next is we can do drawings account. Since interest on drawings is added to drawings account, drawings will be increasing, so drawings account debit to interest on drawings. Both are correct. Okay, we are done both the entries here. First, our capital account debit to interest on drawings and amount is 1,500. Our next entry, drawings account debit to interest on drawings account 1,500. Both the entries are correct. Okay, now let's see the opening entry here. What is our opening entry? All assets are debited and all liabilities are credited. If there is difference and capital is not given, then that difference will be considered as capital. Okay, and if capital is given, then also there is difference, then that difference will be considered as goodwill. Now let's see this question here. You are given assets and liabilities, both are given separately. So we will debit cash, bank, stock, furniture, debtors. Total is given and it is specified also, so we have to write it separately. So what we will do, cash account debit, bank account debit, stock account debit, furniture debit, X debit, Y debit and Z debit. All assets will be debited. 2. Loan from Vikas and creditors also specified. Then 2 loan, then 2A to B. Then we'll do the total of asset and we'll do the total of liability. Here our total is 4,38,000 and 1,12,500 is your liability. That means there is a difference of asset and liability, and we can see that capital is also not given. That means that difference is your capital. Okay, now let's see how to do the journal entry here. How we'll do the journal entry here? First, our entry will be cash account debit 60,000, bank account debit 40,000, stock debit 1,50,000, furniture 43,000, then X 35,000, Y 50,000, Z 60,000. Then we'll write 2 loan, 2A, 2B. That amount will be written in the credit column. After posting all the asset and liabilities, we will do the total. Okay, we have to prepare the working note. We have to find out the capital. Since capital is not given, that means we have to find out the capital. Okay, so what is the formula of capital? Total assets minus total liability. Total asset, we have written all the name of all the assets and put the value of all the assets, and that is 4,38,000. Okay, the next is total liabilities. Loan, Vikas, creditors A and B. Total of creditors is 1,25,000. Okay, now we have got total asset and total liability, and this difference is your capital. Then we'll write to capital account 3,25,500, and then we will do the total. In this way you have to prepare the opening entry. So how we will do? We'll record first all the asset, then we'll record all the liability, then we'll see that whether there is difference or not. If capital is not given, then the difference will be capital, and if capital is given, the difference will be goodwill, and that will be written in the debit, goodwill account debit. Okay, so in this end you have to show the working note also clearly. Okay, now let's see the journal entries regarding discount. Now question is, received rupees 4,700 in full settlement of debt rupees 5,000 from Ram. That means we have to receive 5,000 from Ram, but only we had received 4,700 in full settlement. That means we are not going to receive any amount again. There is settlement is completed. Okay, so whenever the settlement is completed, that means full settlement is given, the difference amount will be considered as discount. Okay, so here we are receiving the amount, so cash will be debited, and Ram is giving, so Ram will be credited, and here this discount is a loss for us because we are giving the discount, so discount will also be debited. Okay, cash and discount always comes together. So what will our journal entry? Cash account debit 4,700, discount account debit difference. What is the difference? 5,000 minus 4,700, 300 to Ram. Okay, so entry will be cash account debit 4,700, discount account debit 300 to Ram 5,000. So whenever full settlement is given, the difference amount will be considered as discount. Now let's see the next entry. Paid rupees 1,800 to Ajay in full settlement of 2,000. That means we have to make payment of 2,000 to Ajay, but we only paid 1,800. That means 200 we are receiving the discount. Since full settlement is given, that means the difference amount is discount. Okay, so here we are making the payment, so cash is going out, cash will be credited. Discount we are receiving, that will also be credited. Ajay is receiving, so Ajay will be debited with 2,000, cash 1,800 and discount 200. What will be our journal entry here? Ajay debit 2,000, to cash 1,800, to discount 200, being paid to Ajay in full settlement of rupees 2,000. Okay, now let's see the next question here. Here it is given, sold goods of invoice price 10,000 to Neha at 20% trade discount and 10% cash discount. He paid half the amount in cash. Here trade discount is given, that will not be entered in the books of account, but cash discount is given, that will be recorded in the books of account. But they paid only half the amount in cash. That means cash discount will be given only to the amount paid. Okay, that means half of the amount, half of the sales will be considered as credit sales. So whenever half payment is given, we have to prepare the working note. Okay, so let's see the working note, then we'll prepare the journal entry. So list price is 10,000, trade discount 20% means 10,000 is 20%, 10,000 into 20 upon 100, 2,000, that we are deducting. So what is our net sales price here? 8,000. The question it is given, he paid half the amount in cash. That means half of the sale is in cash and half of the sale is in credit. So whenever half payment is given, you divide cash and credit. Okay, then here now cash discount is given, so cash discount will be given only for cash sales. That means only for this 4,000 cash discount will be given. 4,000 is a credit sale. Okay, so we'll calculate the cash discount for 4,000, 10%, 4,000 into 10 upon 100, that is 400. So what is the cash we have received? 3,600. Okay, so here now we had seen we are having the net sales. Okay, trade list price minus trade discount, we are getting net sales. In question it is given we sold the goods, that means it is net sales. Okay, then we had divided that into two, cash and credit. Now how to do the journal entry? Net sales will be recorded in sales account. Sales is always credited. Okay, then rest all will be debited. Here we have to receive 4000 cash, but we are given the discount 400, so discount is allowed, that will be debited. We are receiving the cash 3600, that also will be debited. Now we are having credit sale, that means Neha is a debtor to us. Okay, we have to receive the amount 4000 from Neha, so Neha is a debtor, so Neha will be debited. So what will be our journal entry here? Cash account debit, discount account debit, Neha debit to sales. Okay, so you prepare this working note, and from this working note we can prepare the journal entry. If it is purchases, here it will be purchases, then we will deduct the discount, and here we will get the cash amount, and here it will be credit purchase. Okay, so when it is purchases, purchases will be debited, and the rest 3 will be credited. And if it is sales, this all will be debited and sales will be credited. So what will be our journal entry? Cash account 3600, discount 400, Neha 4000. Okay, if you do the total, we have to get 8000. Okay, here it is 8000, sales 8000. Okay, so whenever half payment is given, we have to prepare the working note and find out the amount of credit purchase and credit sale, and that also is to be recorded in journal entry. So now see the next here. What is given? Bought goods worth rupees 10,000 from Ashish at 20% trade discount and 12% cash discount. He paid 75% of the amount in cash. Here also we are not receiving the full cash, paying the full cash. There is a credit purchase. Okay, so let's first prepare the working note, then we will do the journal entry. Okay, so what is our working note here? List price is 10,000. We have deducted the trade discount. Net purchase is 8,000. Here 75% of the cash is, we are making the payment. That means 25% is a credit purchase. Okay, so from this cash purchase we have to deduct the discount. Cash purchase 8,000 into 75 upon 100, that is 6,000. On this amount we will getting the cash discount. So 6,000 into 12 upon 100, that is 720. We will deduct that. The actual amount which we have to pay is 5,280. Okay, and we are having a credit purchase of rupees 2,000, since because we are only making the payment of 75%. So what will be our journal entry here? Purchases will be debited to cash account, to discount account, to Ashish. Okay, now let's see the entry here. Our entry is purchases account debit 8,000, to cash 5,280, discount 720, and Ashish 2,000. Total if we are doing, we should get 8,000. Okay, so if half payment is given, we have to either record the debtor and creditor along with the discount. Okay, now next question is that bought goods worth rupees 15,000 from Pawan at 20% trade discount. Okay, so here we are purchasing the goods at trade discount. There will be only the journal entry of purchase, and trade discount will be deducted from. What will be our journal entry? Purchases account debit to Pawan, and we will deduct 20% and we will record that in purchases. Okay, so let's see the entry here. Purchases account debit to Pawan, and list price is 15,000. Trade discount we have deducted 20% of 15,000, that is 3,000. Net purchase value is 12,000. Okay, we have to do the journal entry and record the net purchase price. Okay, now let's see the next question here given. Return goods to Pawan of list price. When we are returning the goods and list price is given, that means we have to deduct the trade discount in the amount. Okay, so here what will be our journal entry? We are returning the goods to Pawan. Pawan is a receiver and goods, it is purchase return. We purchase the goods from Pawan, so the return will be purchase return. What will be our journal entry? Pawan debit to purchase return, and amount we have to deduct the trade discount and write. So whenever the goods are returned and list price is given, you have to deduct the list price and trade discount, then we have to write the amount. Okay, so in this way we have to do the journal entry of discount. So here we had learned two things, that if full settlement is given, that means the difference will be considered as discount. Okay, next is that if half payment is given, half of the sales or the percentage of amount not given will be considered as credit, and we have to record the journal entry of credit also. If purchase is given, purchase will be debited, rest all will be credited. If sales, all will be debited and sales will be credited. And when the goods are returned on list price, we have to deduct the trade discount from the amount. Okay, now let's see the journal entry of bad debt. So here it is given, Mohan is declared insolvent. Okay, if any debtor is declared insolvent, that means we are not going to receive any amount from him, and the amount which we are not receiving from the debtor is termed as bad debt. So whenever there is insolvent and we are not receiving, that amount will be transferred to bad debt, and some amount is received from the official receiver, that will be recorded in the cash account. Here it is given, received first and final dividend from his official receiver 50 paise in a rupee against rupees 5000. That means from 1 rupee we are getting 50 paise, and 50 paise we are not receiving. So 50 paise will be considered as cash, and 50 paise, the not a received amount, will be transferred to the bad debt. Now how we'll do the calculation? From 1 rupee we are getting 50 paise. So from 5000 rupees, how much will be getting? 5000 into 50 paise, that is 0.5. Okay, that means half of the amount we are receiving and half we are not receiving. The amount which we are receiving will be transferred to cash account, and the rest will be shifted to the bad debt account. Okay, bad debt is a loss, so that will be debited. Cash we are receiving, so that also will be debited, and Mohan will be credited. Our entry will be cash account debit, bad debt account debit to Mohan. Okay, amount 5000 into 0.50, that is 2500, 5000 into 0.50, 2500, and total amount is 5000. Okay, so since here 50, suppose if it is given that 40 paise is received, so what we will do, we will multiply cash amount 5000 into 0.40. How much amount we are not receiving? 60 paise. Okay, 1 rupee is 100 paise. Okay, so it 40 we received, that means 60 we had not received. Okay, we will deduct from 100 and find out how much we had not received, and that will be transferred to bad debt. So whenever there is insolvent, the amount not received will be transferred to bad debt. Okay, so if half amount, we have some amount we are receiving, that will be going to the cash account. Okay, now next is rupees 8000 due from Ramesh is not recoverable. Amount not recovered is considered as bad debt. Okay, now Ramesh was the debtor, now he is not, we have to close his account, so we will cancel Ramesh by crediting him. So what will be the journal entry here? Bad debt account debit to Ramesh. Amount due from Ramesh not recovered. The amount which is not recovered is considered as bad debt. Okay, so journal entry for bad debt is bad debt debit to debtor. So who is debtor here? Ramesh. Bad debt account debit to Ramesh 8000. Next it is given, Shyam owed rupees 15,000 become insolvent. Again, insolvent means the amount which we are not receiving will be transferred to bad debt. 50% is received from his estate. That means 50% we are not receiving. What will be our entry? Cash account debit, bad debt account debit to Shyam. Cash 50,000 into 50 upon 100. Percentage is given, so we will calculate it by 100, and if in rupee it is given, we will consider 100 paise. Okay, and then here next bad debt also same, 15,000 into 50 upon 100. So our entry will be same here. What will be our entry? Cash account debit, bad debt account debit to Shyam 7,500, 7,500 and 15,000. Okay, so if we are receiving some amount from a debtor who become insolvent, that will be transferred to cash account. Amount not received will be debited to the bad debt account, and total amount will be credited to the debtor account. Okay, now next is received rupees 10,000 in cash from Sohan for bad debt written off last year. Okay, here we had considered as bad debt and written off the amount of 10,000, but now this year we are receiving. When the amount of bad debt is received, that will be credited to bad debt recovery account. Okay, that is the income, so it will be credited. Cash is coming in, so cash will be debited. So what will be the journal entry for bad debt recovery? Cash account debit to bad debt recovery account. Okay, so this is important to note it down that when the bad debt written off is received, it will be credited to which account? Bad debt recovery account. An entry will be cash account debit to bad debt recovery, and amount will be 10,000. Okay, so let's see the entry: cash account debit to bad debt recovery 10,000, 10,000. Okay, now let's revise here. So if any debtor is declared as insolvent and we are receiving some amount, the amount received will be transferred to cash account and the rest not received will be transferred to bad debt. Both will be debited and debtor will be credited. Okay, if the amount is totally not received, that will be transferred to bad debt. A journal entry for bad debt is bad debt debit to debtor. And if we are receiving the amount of bad debt which we had written off previous year, that will be credited to recovery account. Okay, so entry for bad debt recovery is cash account debit to bad debt recovery. Okay, so important point to note down is that if full settlement is given, the difference amount will be transferred to discount account, and if insolvency is given, the amount not received will be transferred to bad debt account. Okay, thank you.